Good evening, everyone. Thank you for joining. I am not sure who is going to be joining me tonight. This could be a solo. There's a couple of people that said that they were getting home in a little bit, so we'll see what happens. And I've been reading the comments for the past couple of minutes, and I got to tell you, this chat is phenomenal. Community is phenomenal. Love the Milk and Cookies chat. Love the fact that Ray just finished Casino Royale, which is by far the best James Bond movie they've ever made. I will say arguably you could throw GoldenEye in the second spot, but Sean Connery's not up there. Sorry, everyone. Daniel Craig is the best James Bond. And that's right. Whole milk is the only milk. Sometimes we go chocolate milk dark side like tonight. Freaking delicious. So before we get started, please pause the video and read this disclaimer. I am not a registered investment professional. I'm not a financial advisor. I'm not your financial advisor. I just do a lot of research. This is for entertainment and educational purposes only. So please take a moment, pause, and read this. Thank you very much. So it was a crazy week this week. Let's actually run through the numbers. So S&P up almost 3% in the past week, relatively flat over the past month. To think that we're up 16.5% for the year is pretty wild, especially since we got to 48.35 in April. Current level, almost 68.50, and the S&P has rebounded almost 42% since the April lows. This is why I always say, take a step back and just relax, because as long as you're not in very risky assets, over time, the market will correct. Sell-offs are inevitable. Retracements are inevitable. But in the broader markets, that has not mattered it hasn't mattered what has happened, whether it is the financial crisis, mortgage crisis, pandemic, high oil, high inflation. Over time, the markets have reacted well. So now let's go into NASDAQ, even crazier, up 58% since April. I mean, we're up 21% year to date. This is turning out to be a great year. I wasn't going to say it, but there are several people who said in the chat, the 7K prophecy could come true. Let's see. I was one of the first, if not the first, that said it. I don't know many people that were saying it at the beginning of the year, and I don't know many people that were saying it in April other than me. We'll see. As I explained, some of the boys are out. Some of them are getting home in a little bit. I had messages that said, we'll be on a little bit, so we'll see. Who knows? It may just be me. It may not just be me. We'll see what we get. We will see what we get. So that's the market recap for right now. I want to roll into some stuff with the economy and the Fed. So I'm going to try to do timestamps for everyone. So labor market, jobless claims and unemployment. Initial jobless claims this week was 216,000, down 6,000 from the prior week, lowest level since mid-April. We have continuing claims, which was roughly 1.96 million, edging higher, which not great. Unemployment, not great. It rose to 4.4%. It's the highest level in roughly 4 years, even though payrolls grew modestly at 119,000 jobs. So we're not seeing mass layoffs, but continuing claims close to 2 million and unemployment creeping up to 4.4% definitely signals that companies aren't in hiring mode either, which to me is a problem. And I have a chart somewhere. I have a lot of things open. We may need to do a whole segment on my setup and everybody in the chat may have to help me out figuring out if I'm just going to go get a whole nother setup. So the reason I'm worried about unemployment is because every time since 1948 that unemployment has increased by 1% or more, we've entered into a recession. That's not good for the labor market, not good for Americans, not good for stocks. And more importantly, taking my personal preference for the stock market out of it, ultimately, I want good jobs for Americans. That is the most important thing. I would rather sacrifice returns for a year or two in order for there to be a strong labor market for the American public. And you know what? Unemployment going up like this is scaring the hell out of me. And I have said that this is the only factor that I necessarily care about when looking at if we're going to get a recession or not, because the inverted yield curve was bullshit. It is just a ongoing thing that a lot of times a recession follows, but that's not the indicator to look at. Recessions occur when people do not have jobs and have to tighten the belt on spending. And this is a clear indication. And looking at where we were and where we are on unemployment, it is creeping up. We've never had a situation, when you look at this chart, okay, we've never had a situation where we've gone up this much and a recession has not followed. We could find out in 2026 that we were in the start of a recession right now. Now, at the same time, maybe that doesn't happen. Maybe the Fed can actually start cutting again, get everything going. So we'll see. But this chart is very scary. Now, we are seeing good growth. And in order to have a recession, you need 2 negative quarters. So you got real GDP at 3.8% annualized in Q2. It was the strongest since Q3 2023. And there's no indications we're going negative anytime soon. So we'll see. This could be a situation where we're able to grow our way out of it. Now, we have headline PCE, which was 2.7% year over year in August. Core PCE, ex food and energy, was 2.9%. The Cleveland Fed is forecasting that PCE would be 2.9% in November. And PPI data implies that we're going to get 2.8 to 2.9%. So we'll see. Inflation is not at 2%. I don't think it's going to get to 2% anytime soon, but that should not be a reason for the Fed to get worried and the Fed to hide behind we need to wait for more data. So we'll transition to the Fed now. And I got thoughts on that, but right now we had some speeches. Christopher Waller, Fed governor, November 17th speech, indicated that the labor market is weak and near stall speed. He argued that the underlying inflation is close to 2% target once you strip off the tariff noise. And he is in support of cutting the policy rate by another 25 bips in December. Then we had John Williams, New York Fed president, and the FOMC vice chair. In late November, he said there is room for near-term rate cuts. And his comments alone, I think, pushed market odds for a December cut to 70%. They were at around 35, 36%. And then Mary Daly, San Francisco Fed president, publicly backed a December cut, warning that the labor market is in fragile territory. We also had Stephen Moran, Fed governor, indicate that we are overly tight policy and argued aggressive and swift cuts to avoid more job losses. So when you have these Fed participants that are voting members indicate this, it does seem like that we could get a cut. Now, this is what I've been saying for a very long time. We'll see what happens. I think the Fed has more of a responsibility to worry about jobs than whether inflation is 2%, 2.5% 3% or 3.5%. It's ridiculous. And when we see jobless claims come in like this, it's not good. JP Morgan, they pulled forward their cut. They're expecting a 25 bip cut. Goldman Sachs is also saying that we're going to get a cut. And when we look at CME Group, these numbers have changed dramatically. We're at 86.4%. I mean, this was so much lower. This was in the 30% range a couple of weeks ago. So I think we are going to get a cut. Now, here's where I think that we are going to see a lot of things change on the dot plot. So we know that Jerome Powell's out. We know Jerome Powell is not going to be the Fed chair come May. That's a fact. President Trump wants low rates. I think Waller or Bowman or Hassett is going to become the Fed chair. I wouldn't mind either of those three picks. We'll see who it is. Maybe President Trump will call me since I think I would do a good job, but I'm probably the only person that thinks I would do a good job. But I really wouldn't mind Bowman, Hassett, or Waller. Now, when we get a new Fed chair, I think that they're going to have a lot of influence over some of the other members, and I think you'll see the tone start to change. I do not think that we're going to end up at 3.25 at the end of 26, because that would mean that we're only going to get one rate cut next year. I'm not buying that. I think we're going to be way closer to 3% next year, and I'd like to see in 2027 us down to 2.5%. We don't have to go to 2%. We absolutely don't. But getting us at 2.5%, I think, is a good happy medium, because you have debt rolling over from businesses that took out loans in a low rate environment. And when they refinance at the current levels, their margins are going to compress, and they may have to lay people off to make up that margin. I don't want to see that. You also have an environment where the housing market is still not really moving. And people who borrowed, and I happen to like the idea of transferable mortgages. I do not like the idea of a 50-year mortgage. A 50-year mortgage does not make any sense to me, no matter which way you shape it up, because you're paying interest for, 15 or 20 years before you start paying into equity. I mean, I haven't run the numbers, but that's what, when you just base off of a regular amortization schedule, I mean, it would have to be something like that. And I think it's a crazy idea. But transferable mortgages wouldn't suck. And I think that would have helped in the situation that we're in, because in all seriousness, if you have a 3% mortgage, unless you have to move to another state for work, you're not going and freaking buying something and taking out a 7 or 8% mortgage. Unless you absolutely have to for some reason. It just doesn't make financial sense. So I think getting rates down will stimulate the economy in a good way, because it'll unlock the housing market. People will do more repairs. You'll see more construction jobs, and the business environment will be in a position where they can borrow and they can refinance at levels that make sense for their businesses. So I'm in favor of rate cuts. I want to see rates at 2.5%. I think it'll be very good for the stock market. I think it'll be good for earnings, but more importantly, I think that it will be very good for the American public and the job market. And that is the most important thing. We should be putting, enough with the seesaw stuff being equal, we need to favor the job market over inflation. I should probably do a poll just to say, actually, you know what? We're going to do a poll. Let me open up the stream on YouTube and put a poll out. I want to know if paying $102 versus $103 next year would make a difference in your spending habits. So give me a sec. Because I don't think it would. So here we go. Start a poll. Would inflation causing... How should we word this so everybody answers it truthfully? Let's see. Okay. Would $100 costing 103 instead of 102 stop you from purchasing anything next year? All right. Please actually answer this, because if the overwhelming amount of answers say yes, then I will stop saying this is a rhetorical thing. But I really just don't see. I mean, look, it's a difference of $1 on every $100. So we know we have inflation every year, and going to 103 instead of 102, I just don't think is going to make it where people are going to not spend. So we got 100 votes already, 85% no, 15% yes. I get it. I wasn't expecting 100%, but I was expecting an overwhelming amount to be on the no side. And I am not saying that I want inflation by any means. I do think that there is a way where we have a inclusive business environment, and that makes sure that the supply is there to meet demand, and we let the free markets work themselves out. But I do think that we need to prioritize the labor market over inflation, unless inflation is running rampant and going crazy. Obviously, then we need to increase rates. But I think that tinkering with rates too much is not a good thing. Chocolate milk is absolutely fire tonight. All right. We got 150 votes. And on 150 votes, 82% no, 18% yes. So I think that's pretty good. And it just goes to show that my line of thinking is not craziness. So we'll see what happens. We got the FOMC meeting on December 10th. And hopefully we get 25 bip rate cut. If we don't get a rate cut, I hate to say this, Santa Claus is not coming to town for the stock market. I hate to say it. I don't think we get to 7,000 if we don't get a rate cut, because I think we'll get a narrative of the Fed is going to be too data dependent. Now we may not get a rate cut in January. Now we may not get a rate cut in March, blah, 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 blah. Sorry, I'm going to put my phone on silent. Obviously, people are texting me. And so we'll see what happens on December 10th. I have a few things I want to talk about. I'm going to start with Microsoft. So we're at the 19-minute mark. So I recently became a shareholder of Microsoft. And I think it is arguably one of the most complete companies that there is. So I want to show you a few slides that I grabbed from their deck. So I went through their numbers, okay? Their numbers are amazing. And when I think about the businesses they're in, from the business aspect with Windows and Office and SharePoint and Azure with Intelligent Cloud, and their personal computing, their gaming, LinkedIn, this is a company that I believe has a lot of staying power. They just did $30.8 billion in net income over a 3-month period. Net income grew 22%. I mean, that's incredible on an adjusted basis. That's incredible. You want to go into a net basis, it increased 12% year over year, which is still amazing. $27 billion. Absolutely crazy. And this goes back to the whole CapEx thing about where companies are spending the money. We just saw a huge boost in Microsoft. And look, the big reasons why I purchased Microsoft, and I was never shared. This is the one that I never owned from the Mag 7, which we had a conversation last night. I've been calling it the Spectacular 6 X Tesla. We're going to go back to Michigan basketball. We're going to start calling it the Fab 5. X Apple, X Tesla, the Fab 5. Amazon, Alphabet, Meta, Microsoft, and NVIDIA. So this was an incredible quarter. $77 billion in revenue, up 18% year over year for Microsoft. Operating income up 24%, $38 billion. Net income just showed you $27.7 billion. We got cloud revenue. This is crazy. Cloud revenue of $49 billion, up 26% year over year. To me, that is just signaling a tremendous amount of growth. Now we get commercial cloud was up 17% year over year. You have Dynamics, which is up 18%, which is interesting. LinkedIn, which was up 10%, which is interesting. And Intelligent Cloud up 28%, $30.9 billion. Azure and other cloud services in total was up 40% year over year, and it's accelerating its growth versus prior quarters and continuing to beat expectations. So, I mean, before we go into the actual raw valuation, I want everybody to keep their mind on this. Microsoft Cloud revenue, keep this in mind, 26%, but commercial bookings, 112% year over year. This is a huge inflection versus the prior quarters. You have commercial remaining performance obligations at $392 billion, which is up 51% year over year, with a weighted average duration of 2 years. Now, on the AI metrics, this is where I was shocked. And I'm going to explain why from a business aspect. 900 million monthly active users of AI features across Microsoft platforms. And they have 150 million monthly active users of first-party copilots, M365 Copilot, GitHub Copilot, etc. Now, to me, this is very sticky, and I think it's only going to get bigger because when you're in corporate America, and I'm going to create a picture for you where think about when I say corporate America, think about it as if you have an M365 account for your personal, okay? Corporate America, you have an enterprise agreement and you're getting E1, E3, E5 licenses. Now, pricing could be a little bit different depending on what type of company you are, how many accounts you have, et cetera, et cetera. But Copilot is an upcharge. Those are all big upcharges on a monthly basis. So when you have 150 million monthly active users for first-party copilots, that's an upcharge. That's huge. And there are some AI features that are upcharges. And I think that's only going to become more lucrative for Microsoft. I really am very bullish on Microsoft. I'm shocked I didn't own them before. And I want to show everybody this. Got some spreadsheets for you. We may have to rearrange this one. This one's a little big with all the profitability and stuff. But let's see. Can I make that a little bigger? Can you, everybody in the chat, can you just let me know? Can you see the numbers good, please? I'm just going to assume yes, because it looks okay on the screen for me on StreamYard. So Microsoft on a trailing 12-month basis, $293 billion of revenue. They're doing $166 billion of EBITDA. They're doing 135 billion of operating income, free cash flow of 78 billion. Now think about this. They did 147 billion in cash from operations and they allocate 69 billion to capex, and they still produce 78 billion in free cash flow. Who is able to compete with them? In all seriousness, I don't know many people from an organizational standpoint that utilize a Google Suite. Nothing against Google Suite. I actually like Google Sheets for charting. I think the charts are better in Google's product than Microsoft's product. But from a business aspect, in many cases, it's Microsoft or bust. Net income of 104 billion. These margins are incredible. EBITDA margin of over 50%, cash from operations margin of 50%, free cash flow margin of over 25%, and net income of over 35%. More than 1/3 of every dollar generated in revenue is pure profit. And when I look at the valuation, I'm happy adding to my position here. I think that Microsoft is going to do very well over the next couple of years. I think it's going to run. Became a shareholder for the first time. I can't believe that I wasn't a shareholder. The numbers are just really, really enticing to me. And these are not analyst numbers. These are the trailing 12, the actual margins, and how it's actually trading right now. So I look at this versus Alphabet. I love Alphabet. A lot of you know I love Alphabet. I am actually considering writing an article tomorrow and downgrading my viewpoint on Alphabet. I will talk about that in a little bit. I'm not bearish. I don't think now is an attractive time to buy Alphabet. It's funny how everybody lines up. I love the pictures on X of everybody at the door with Alphabet at 330 a share and nobody there at 150, 160. It's hilarious because it's the truth. The easy money's made on Alphabet right now. And I think Microsoft is trading at a level that really makes sense to me. And when I look at the forward valuation, Microsoft on a forward basis is the third cheapest in the Mag 7. Now, I have Coca-Cola in here, and I have Walmart, and I have Costco, and I have Broadcom and Netflix for very specific reasons, okay? Netflix is something we don't talk enough about. It's a great company, and that's annoying me, so I need to change it right now. Rookie mistake. Why is there no dollar signs there? I don't know. All right, it looks good now. So, Costco and Walmart, phenomenal companies, huge staying power, but I judge things off of where they are because, look, respectively, they have over 20% growth. So we know they're low margin businesses with staying power. So I like to see where they are versus everything else. And Coca-Cola is just Coca-Cola. It's just one of my favorite companies. I prefer Coca-Cola over Pepsi. And it's hard to argue with a company that is selling their products in 200 countries and territories. Company's a dividend king, not going anywhere. But low growth. So I look at Microsoft, and the street is expecting them to do 16. Now, I will say this, okay? These numbers are not on calendar year for Microsoft, so keep that in mind. They don't report on calendar year, so I had to play with it a little bit. But effectively, because the majority of companies report on a calendar year, I'm throwing this in there. In this fashion, they're expected to do $22 in 2027 of EPS. That puts them trading at 22 times forward earnings. So they effectively have 38% EPS growth over the next 2 years. They're buying back a ton of shares. They're growing the dividend, which is not much, but it's still something. But why would I not want to buy Microsoft with that much growth and that low of a forward valuation? The market's forward looking, and I don't think there's a company that can compete with Microsoft. They have the Windows operating system. They have 365 from from a recruiting standpoint and networking standpoint, LinkedIn is huge. You have Dynamics, which is their ERP system. You have their cloud division. You have personal computing. You have gaming. It's a very complete company, very hard to compete with. Meta is the only other one in NVIDIA that have lower valuations. And I can understand what some people thinking NVIDIA is going to be cyclical. We'll get into NVIDIA versus Alphabet. But right now, Microsoft is the one that I am focusing on because I don't have a big enough position, I feel, in them. I have a bigger position in all the other ones I want to be in. So this is where I want to be. So let's get into the whole Alphabet, NVIDIA, Meta stuff. All right. So what happened this week? Well, Meta is now in talks to spend billions of dollars on Google TPUs, which are their AI chips, starting in 2027. Last time I checked, it's 2025. So we're still going to have a full year of people grabbing everything they still can from Jensen and NVIDIA. So we'll get into how I feel about this. But look, the deal could also include Meta renting TPUs via Google Cloud as soon as next year, which isn't surprising because keep in mind, Alphabet's been building TPUs for 10 years. They're on their 7th generation chip. Now, that's always been their strategy, and it's been a great strategy because it helps make their cloud a differentiator. Amazon's doing the same thing with Anthropic, I believe it is. Correct me if I'm wrong. I'm pretty sure it's Anthropic. But they're doing the same thing with that huge data center that had 500,000 of their TPUs, and they're expecting to scale to 1 million next year. So Alphabet jumped huge on the news. NVIDIA got hammered. And how quickly everybody forgets what NVIDIA's quarter was like. Because NVIDIA threw up 63% year-over-year growth in revenue, around a 56% profit margin, and 57 billion of revenue, then guided for 65 billion. Jensen said on the call, everything is already sold out. All cloud GPUs are sold out. Alphabet also released Gemini 3. I got to tell you, I'm not impressed. And I think everybody's going ooh gaga over nano banana or whatever it is, but I don't use that stuff. So I started playing around with Gemini, and I started playing around with Grok, and I started playing around with ChatGPT. And I got to tell you, I started paying for a ChatGPT subscription so I could play around with it because I wanted to stop taking everybody's opinion at face value and do my own research. And I put the same prompt in from ChatGPT to Gemini to Grok. And I got to tell you, I actually think ChatGPT is the best one, followed by Grok, followed by Gemini. That's my own personal opinion. I know a lot of other people really like the upgrades to Gemini. They're all really good. I just happen to think for the stuff I'm typing in, ChatGPT is a little better. That's just my opinion. Now, Gemini 3 was trained on on their TPUs, which is a big selling point for a lot of companies. To me, the big winner is Meta in this. And keep in mind, Broadcom's CEO is on Meta's board. So the way I look at this is NVIDIA is the biggest AI dealer there is. They have the dominant hardware. They have the CUDA software ecosystem. They have a lot of developer tools, and they are highly exposed to hyperscaler CapEx cycles. And the in-house chip efforts with TPUs are great for Alphabet, Triadium for Amazon. But at the end of the day, they're custom AS ICs. I do think that these are just going to be chips that help run proprietary workloads on their cloud servers. And they're still going to need NVIDIA GPUs for the raw horsepower. And who's to say that NVIDIA is not going to get into that space too with the TPUs? I don't think Jensen's going to sit this one out by any means. And I think people that are discounting NVIDIA are crazy here. So I want to bring the valuation thing back up, and then we're going to go to Seeking Alpha and look at some forward estimates because they update every day at this point. But keep this in mind. I love Alphabet. I am not selling Alphabet. I've had Alphabet for a long time at this point. Their numbers are still interesting. But please keep in mind, we were at, where were we? What, 220 or so? Let me open it up on another window. Let's use a regular number. And I don't want to use just what they were in the summer because it's not applicable because the earnings changed. But over a month ago, we were at 267. So if I plug in 267 here, they were trading at 21 times forward earnings. With where they are now at 320, they're trading at 25 times. And if we do look back at the 150, 160 area, this is skewed because after the blowout quarter, their EPS numbers increased, and this would have been the same. But even if you look at it this way, it was trading at such a discounted valuation, and we know that Alphabet's doubled since the summer. I don't think this is the time to get into Alphabet. Now, can it keep going up? Absolutely. And I expect it to. But for me, deploying fresh capital right now, it's not where I want to be. I actually have a bigger bull case for Amazon than all of them. I have a stronger bull case for Microsoft and Meta and NVIDIA. So I think that we're in a situation where Alphabet's going to do fine. I think there's more ROI on Microsoft. That's just from the due diligence I've done and how I'm looking at forward earnings and where the potential is. I fully expect Google Cloud to keep expanding. And the idea that search was going to get cannibalized was insane. I mean, let me bring this up. Everyone's about to get a glimpse of my craziness on my spreadsheets. So this is the right one. So for those of you that don't know, I write a lot of articles on Seeking Alpha. I do, like I said, do a lot of research, and I track all their business segments. I mean, look at search. How many times did we have to hear search is dying, search is dying, search is dying? Last time I checked, it's not dying. Search is doing phenomenal, and I expect it to continue to do phenomenal. Google Cloud is on an inflection point with an S curve. You got YouTube ads growing, Google Network kind of sideways at this point. But look at the subscription platform. Subscription and devices is doing really well. I mean, this is an amazing company. And when we look at the numbers on Google search, year over year, they went from 49.4 billion to 56.6 billion. They added 7.2 billion in revenue year over year and grew at 14.5%. That's not search getting cannibalized or search dying. And I actually think OpenAI is at risk here because OpenAI is not profitable. They continuously have to spend money, and they're up against Alphabet that has the most data out of any other company. They own search. They own YouTube, which is the second biggest search engine. They're funding their entire operation from their cash from operations because of the amount of free cash flow they have. And they have their own cloud infrastructure to run everything on. I would not want to go up against them. So when I hear these numbers for $500 billion or $1 trillion for OpenAI for a company that doesn't generate a profit, to me, it's crazy, but we'll see what happens. Now, when it comes back to NVIDIA and Alphabet, I think that everything that happened is bullish Alphabet. I think that Meta is the big winner. If Zuckerberg comes out, and everybody knows I'm a huge Meta believer, Zuck, in my eyes, can do no wrong. He has earned the right to spend the way that he spends. For Zuckerberg, if he comes out and if he says, over the next year, we're going to transition to a combination of GPUs from NVIDIA and TPUs from Alphabet through a partnership with Broadcom designing and manufacturing. And that will allow us to drop our CapEx or keep our CapEx at this level. I think the stock is going to go haywire. And I'm actually hoping he says that, because they do not have a public-facing cloud that they are monetizing. They are doing everything for the algorithm, for AI tools on advertising. They're not hosting other companies' infrastructure. So they may not need the expansion in the future the way that Amazon, Alphabet, and Microsoft does. And that's one of the big things that the street is very worried about, is Zuckerberg spending, some of his comments on the earnings call. So Meta could be the biggest winner out of all this. And I wouldn't be surprised if they are. So that's where I'm at on Meta. That's where I'm at on NVIDIA. I think NVIDIA is interesting. If for some reason it keeps going lower, I would start adding again, even though it's become a big position in my portfolio. And I'm not adding to Alphabet here. I think Alphabet is just in a position where it's run so much over the past year that I just don't see it going much further. We'll see what happens. Now, Amazon, let's transition to that because I got a lot of conviction. Oh, you know what? Hold on. There was a video that I wanted to watch with everybody. Give me a sec. So yeah, I put a few things on here. Let's see what they had to say about Meta using the chips and see if there's anything we can learn from this. It's a short video. And I don't get time to watch all this stuff during the week, so I watch it with all you guys.
Another move higher for Alphabet and reports of a massive chip deal with Meta. Deirdre Bosa has it all in today's Tech Check, which leads us off as we're glued to this move, Deirdre.
Yeah, so Sarah, here's why this deal matters. It's because Meta is one of the biggest GPU buyers in the world. So if it is exploring billions of dollars worth of TPUs, Google's custom chips, that is technical validation. It's also a major win for Google Cloud because Meta would have to run every TPU inside of Google Cloud. So not just a chip win, it's new revenue, long-term lock-in for GCP, an AI native advantage that Amazon AWS and Microsoft Azure, the other hyperscalers, do not have. Now, this absolutely powers the Google bull story. TPUs give Google real efficiency gains. And remember, too, that Anthropic has already committed to expand its usage of TPUs. However, the narrative that TPUs are about to overtake NVIDIA across the enterprise, that's where investors want to be careful. I spoke with Aaron Jin, CEO and co-founder of Hydra Host. It's a startup that runs large-scale AI workloads for startups and enterprises. This was his point, which is extremely relevant.
Does an enterprise want a fully integrated solution, or do they want a modular solution? I think that's really the question, because Google is would be a fully vertically solution, because the only way you use TPUs is through Google Cloud, and versus NVIDIA is a horizontal solution. It works out of the box. It's a horizontal product, and I think enterprises drawn to the modular.
So for most enterprises, committing to Google's full vertical stack, that is a tough sell. If they want optionality to be able to plug into NVIDIA or AMD or whatever comes next, being locked into a single cloud is not exactly the right play. And in AI, of course, that leaderboard, it changes extremely fast. Narratives, as we have seen over and over again, they can swing harder than the fundamentals. Just Google itself went from broken to beloved in a matter of months, though the business hasn't changed all that dramatically. They've been working on TPUs for over a decade. By the way, guys, you can already see this next turn. Silicon Valley has moved onto Anthropic's new model, Claude Opus 4.5, just days after the Gemini release. Anthropic says that That model beat Google on several benchmarks. So guys, another sort of signal of how quickly this market can turn. Google is on top right now. We shouldn't get too comfortable here.
Yeah, I agree with everything I just heard there. I mean, I don't think that companies are just going to abandon NVIDIA. I don't think the sales are going to get canceled. NVIDIA's numbers are so strong and the ecosystem so strong, and people are not able to really compete with them. Oh, this is interesting. So I pulled another one. I should really write down all the videos I pull up. Former Intel CEO Pat Gesslinger on Google's chips. Let's see this too. This is going to be interesting. Look, wherever you think of him, he obviously has a lot of knowledge running Intel, and this is something that I think is going to be interesting.
Gelsinger here to talk about a fascinating topic, which is this moment right now where peers like Google could have overtaken, at least briefly, NVIDIA, or maybe at least challenging NVIDIA in some new way. And I'm so curious what you make of this news, this idea that Meta now maybe wants to actually do business with Google and buy their chips as opposed to NVIDIA chips.
Well, I think everything here is this is a big market. AI is such a hot space, but there's a lot of activities to bring other chips and other alternatives into the market. A whole flurry of startups that are pursuing that market, including a couple of mine at Playground. But this move by Google is a very meaningful one because they've built 7 generations of their TPU and their tensor processor unit. But I also think, Andrew, it's super important. They're not a commercial chip provider. They've been doing this for their proprietary use and their proprietary data center. And thus the partnership with Broadcom, who's been their design partner, is really critical if these chips are going to come to market at scale. So I think this is really good news for Google. I think it's great news for Broadcom. And ultimately, NVIDIA is such a dominant leader in this space. Competition is good for all. And it just emphasizes how important AI is to our future.
Do you think, Pat, though, I mean, look, you lived at Intel, you've seen this all play out. This idea that, NVIDIA put out this fascinating tweet yesterday. A lot of people looked at that. They didn't understand what to make of it. Do you think in the end, Meta will do business with Google? I mean, there's also this like frenemy, enemy, friend thing going on. And even some speculation right now, for example, that you could see, I don't know if you'll see NVIDIA try to take a stake in Meta, for example, or do something to try to keep that business in some new circular way.
Well, hey, I think NVIDIA is an extremely, technological, very competitive, very aggressive company. That said, Google, the TPU and, what they've done over many generations now, that is a viable competitor. People are looking for alternatives to NVIDIA, just as you would expect them to. And the idea that Google is going to take aggressive steps to make that technology available to others, including Meta, I think is good for competition. I think that's part of what the tweet from NVIDIA is indicating. We enjoy competition. But I think the Broadcom piece of that, making it commercially available, building a proprietary chip for your proprietary data center is one thing. Making it commercially available in somebody else's data center, that's something different. And that, having done that for 35 years of my career, that's a lot of additional work. And that's why I think the Broadcom relationship here is likely so important to fully realize the potential of this for Meta or for any other major data centers.
I want to actually ask you a separate question. We talked a lot about these circular transactions recently. The most recent one might involve either Anthropic and Microsoft and NVIDIA. Anthropic is now the biggest large language model that has effectively investments from all the big three. It's got Microsoft, Amazon, and Google behind it. And what you think of these sort of, I don't know if you think of these equity stakes as vendor financing or not.
Yeah, I just think the quality of the revenue in these circular transactions is less critical. If I'm committing my capital for you to buy my product, that's not as good as you committing your capital to buy my product. So I think any form of that, the quality of that revenue just isn't as high. That said, I think, the balance sheet of these companies are very strong, and they're trying to enable and leverage those balance sheets in creative ways. But, I think markets need to decide how valuable is that real revenue, right, as a result of that circular nature that they have. For one, if they become too extreme, I don't think it's good for markets overall. But clearly moving forward, this has been a creative way to, enable further capital to be deployed in the AI sector.
Real quick, in terms of just who could win this game, let's take the chips out of it. I'm curious what you think of these new large language models. We had Mark Benioff say that he's now moved over to Gemini. He thinks it's spectacular. Anthropic just came out with an upgrade. I think we'll probably see something from ChatGPT. There's always been this question of, is there a moat around these things? So even if they're leapfrogging each other, are people going to jump from one to the other, or is this sort of persistent memory where it knows you or has more data that's what's going to keep you in there?
Well, I'm thrilled to see, new innovations here, and everybody has said the recent Gemini and Google model. I have some of my folks looking at it. It looks very encouraging. That said, I think making large language models, is finding more diminishing returns. I think dedicated models, multi-model experiences, mixture of experts. I do believe that science is showing that that's probably a more likely area for the next breakthroughs to occur. And I think LLMs themselves, will give way to other forms of knowledge representation, that will be the next breakthroughs for learning, for AI. And I think, the idea of super intelligence just based on bigger models, I think is very suspect. I think there's going to be very exciting.
All right. So when I think about this, we're in a situation where nobody knows what the future holds. We don't know how long this build out is going to last. We do know that the hyperscalers are building more data centers. We do know that they have huge backlog in their clouds. We do know that NVIDIA is dropping Rubin next year, and everybody's going to upgrade from Blackwell to Rubin. We know that we need more compute. Whether we get to super intelligence or AGI in the next couple of years, yet to be determined. How much compute we need, yet to be determined. The only thing that we know for sure right now is on the Q3 earnings calls, the 4 companies that matter all said they need to buy more compute. And my premise, oh, by the way, so about Monday night when Tanner came on, I had gotten a flu shot in the morning and it started to hit me very hard. And I just let Chris and Tanner go because my brain was mush. So that's why. I know some of you said that it looked like I was sleeping. I wasn't sleeping, but the flu shot absolutely destroyed me Monday night. So Monday night and Tuesday, I was out of it. So that's why Monday I was a little low energy. But back to NVIDIA and Alphabet and the compute, I'm just not sure how big the TPUs are going to be for a big business for Alphabet. And I'm not worried about NVIDIA at this point. Now, I do think it's inevitable that NVIDIA is going to become a cyclical environment with their chips. The real question, and nobody knows the answer to this, nobody knows when the cyclicality is going to be and how deep it's going to be. A lot of people that follow tech know there's a boom-bust cycle with DRAM. We all know that. But how long does this spend at all costs go? I don't know. At first, I thought it was going to be 24 to 36 months, and that was in 2023. And then obviously I kept upping it because the data kept changing. And until the data changes that we are going in maintenance mode, I think NVIDIA is going to be on an interesting course. I mean, when we look at the projections, so let me bring this up for everybody. And once again, I do my own projections on profitability based on growth rates and everything else. But when I'm talking to all of you, I'm using the consensus estimate projections because this is an aggregate of the analysts on Wall Street. Okay. So when we look at revenue growth, there's a lot of freaking analysts covering NVIDIA. All right. And keep in mind, January 2026 is really the 2025 fiscal year. NVIDIA does not report on a calendar year. They report on a fiscal year that ends in January. 11 of the months are in 2025. So this is really 2025, 2026, 2027. They're expected to do 63% growth this year, year over year, which is insane. And then 62, this could be the most covered stock in the stock market. 62 analysts have a consensus of 315 billion. So think about that for a minute. A company that is doing 213 billion of revenue is expected to grow at 48%. That's insanity. I don't even know what to say to that. And then by another 27% in 2027, 45 analysts. Now, I don't go more than 3 years out because I don't like single digit numbers on the analysts. But think about this. Let's look at Apple. Apple's also one of the most covered companies. 39, 40, and 16 analysts. So there's way more people covering NVIDIA now than Apple. And we're seeing growth rates from NVIDIA that are just insane. Nobody in the analyst community thinks this is going to really slow down anytime soon. And when I say slow down anytime soon, I'm saying from an aspect of materially. Because sure, they're going to add 97 billion next year and then they'll drop to 75 billion. Is it going to decline? Yes, but that's still an insane amount of growth for a company this size. So the real question is this going to get pushed out? I don't think that we're going to find that out until halfway through next year, or maybe even Q3 of next year. So demand for next year, I think, is going to be off the charts. Let's see if these numbers hold up for 2027. But if they do, think about this. If they do, at a 55% margin, they would do roughly 210, 215 billion net income. Maybe NVIDIA is just getting started and maybe we need more of everything. Maybe we need more chips from Broadcom with their ASICs. Maybe we need more chips from AMD. Maybe we need more chips from NVIDIA. We haven't even seen robotics yet. We haven't even seen full self-driving yet. We don't know what the data center capacity needs to be for superintelligence and AGI and anything else these companies are going to produce. To think that we are in a landscape where this is just going to slow down is crazy. AI is at the worst it will ever be. Tomorrow will be the worst it will ever be, and it will get infinitely better as time progresses. So when I see numbers like this, I am not worried about NVIDIA and their forward metric. It is basically a value company at this point. I mean, when you look at what is considered a value company these days, I'm trying to get quicker at these transitions, everyone. So this is the State Street Spider Value ETF. We look at the holdings. Microsoft, Apple, and Amazon are the top three. And then AMD is in there also in the top 10. I mean, NVIDIA is a lower valuation than Apple, Microsoft, and Amazon. So it's trading in value territory based on what they're considering value is. It's just crazy. Chef Mike, thank you so much. Elon's new liquid-cooled GPU stacks reduce power by 69% by. That's hilarious. Look, Elon's doing some freaking crazy stuff. If he makes liquid milk-cooled GPU stacks, I'm going to have to figure out a way to talk to this guy. That would be freaking amazing. How would you even go about liquid-cooled milk? I don't know. That'd be pretty awesome. Thank you for the super chat. Really appreciate it. Hope you had a great Thanksgiving where you weren't cooking and you were actually relaxing and enjoying everything. Now, I do think that we are in a situation where NVIDIA is going to do well. And we were on NVIDIA $212. We're at $177. What has changed since it topped? I mean, think about that. What's the exact percentage on that? I'm going to get you an exact percentage because I am too tired to freaking try to even calculate this. So NVIDIA's fallen 16.58% since its recent highs back in October. What's changed? The only thing that's changed with NVIDIA is they have earnings that blew out of the water. You have huge guidance. We know that everything is sold out. And then Alphabet comes out with their TPUs, and that makes everybody scared. It's crazy. I think it's even crazier. I don't like picking on people, and I'm not going to pick on people. But I strongly disagree when I see stuff like this. NVIDIA, just like Cisco in 2000. I mean, come on. Come on. I'll agree that somebody could say there's too many red flags. All right, sure, that's your opinion. I'm good with that. Whatever. I'm okay with somebody thinking there's red flags in NVIDIA. No problem. But to say it's just like Cisco in 2000, I haven't even read this article. That makes no sense. This is nothing like Cisco in 2000. Crazy. It's just crazy. And it's even crazier that Costco has a bigger valuation. So that's something that really gets me going. So we'll see. Here we go. Of course, I say Costco and we start getting the questions. Thank you so much for the super chat. Does Walmart keep climbing or head back to the mid-90s? Interesting. Let's see. Let's look at Walmart together, everybody. And I'll give you a little bit of an analysis on them. All right. So we're going to share two things for this question. And let me get this off the screen. All right. Walmart, look, phenomenal company. You'll never hear me say anything bad about Walmart. Phenomenal company. It's almost $1 trillion company. The largest revenue company right now, $703 billion. It is not a high margin business, and the growth is not that big. So they're doing 43 billion in EBITDA. Keep in mind, I'm going through this right now because I don't follow Walmart, so I'm just taking a mental note of the different stuff with the balance sheet, the income statement, the cash flow statement. So they got $10.5 billion in cash on hand, no cash in long term, not much debt. I mean, $35 billion in debt isn't crazy for a Walmart. especially doing, what were they doing, 45 billion or so in EBITDA. So that's fine. Here's where it gets interesting. And I want people to really understand where I'm coming from the cash flow statement. So the first thing when I start going down is I'm looking for the incentives for management, which I'm not seeing. That's interesting. They're not giving any stock-based compensation. Normally it's in this section. Okay. Pretty wild. So 41 billion in cash from operations, 26 billion in CapEx. Not a lot of free cash flow for the business. They're not issuing debt really, short and long. I gotta see where that 8.8 is and why that says that. So they repurchased 8.5 billion shares. They repurchase shares every year, which I like. Obviously, they're growing the dividend, all good. Repaying some debt. Low free cash flow per share. Okay. So let me look at where they're expected to have revenue be. Low revenue growth. Double-digit EPS growth. All right. So let's go into the actual. Let me build this out for everybody. So it's unfair to put them up against an NVIDIA. We'll do it for fun afterwards. But it's way more fair to put them up against an Amazon. So that's what we're going to do. All right. So, you know what? I pasted this in the wrong place. I apologize. All right. I think everybody can see this. So, Amazon, Walmart, Costco. Oh, wait. Hold on. Do I need to update these numbers? I need to up. I apologize. Walmart must have reported. Give me one moment, everybody. It's actually good because now I can just update these really quick. So EBITDA, I knew something looked different. Ops income. Cash from ops. That makes me wonder if Costco reported. Like I said, I don't really follow these companies. So I wouldn't have known that they reported. Oh, that would be something if it was 409 billion. All right, what do they do on net? Did Costco report? Did my favorite company report? Can anyone tell me? No, we're good. My numbers on Costco are still correct. Okay, so very low margin business, 4% operating, EBITDA 6%, free cash flow margin 2%, net income margin 3.25. I mean, if I was going to buy Walmart, I would have to ask myself, why wouldn't I buy Amazon instead? And sure, Amazon's a bigger company, but think about this. 670 billion in revenue versus Walmart's 703, and Amazon's producing 140 billion in EBITDA, which is 100 billion more than Walmart. Way more operating income, way more cash from operations. Yes, they're spending a lot more in CapEx, but I would say Walmart will never be able to compete with Amazon on a delivery methodology. So that's very interesting. Free cash flow Amazon's is next to nothing because of the amount that they're allocating toward CapEx. And net income, they're doing almost quadruple Walmart's. Way better margin business, except for on free cash flow, which is expected. And it's trading at a lower price to EBITDA, around the same on operating income, lower on price to cash from operations. Obviously, price to free cash flow is crazy because of their CapEx, but price to net income, they're trading at a better valuation. So now it becomes who's got more growth. We go back to the valuation. Amazon, 33% EPS growth over the next 2 years. Walmart, 26%. Look, I think Walmart's expensive. It will probably continue to go up. And I would say that the bull case would be, well, they're going to be able to harness AI and robotics, and they're going to be able to expand margins, et cetera, et cetera. Maybe. And that very well could happen. So Walmart is not a favorite of mine. Walmart's a great company. You're going to get a dividend out of it. I mean, what is the dividend on Walmart? I don't even think it's that much. Not even 1%. It does have 51 years of growth, but it's not even 1%. So you're not buying it for dividend income. So I don't know. For me, I'd rather buy Amazon instead of Walmart, but I think Walmart's a great company and should do okay. I don't know if it'll keep pace with the market or not. I mean, it has so far. I mean, it's outpaced the S&P over the past decade. So if it continues to do that, who knows? I couldn't tell you. But I'm actually surprised. Have they outpaced Amazon? That would be something. Don't even tell me that they've outpaced Amazon. They haven't, but it's close. I'm shocked. So Amazon's done 593% in the past decade. I did not expect to see Walmart do 455% return. Did not expect that. But look, great company. It's not for me though. So I don't know how to answer you, but I'm an Amazon guy. I like Amazon. That's just me. So it's 10:40. I'm going to open it up and just shoot me some stuff, shoot me some questions. Let's just talk. I want to interact with everybody for a little bit, and we'll call it a night. Make it an early one tonight so I can get some sleep. I haven't been sleeping much these days. Yeah, look, Amazon's one of my dark horses because I think that they're going to harness AI and robotics and they're going to expand their margins, and it's going to be a story that comes out of nowhere for people. Oh, wow, we got people in the Milk Gang talking about closed-end funds. There's a lot of closed-end funds that I like. B as in boy, S as in Stephen, T as in Thomas. BST is a favorite of mine. I like P as in Peter, D as in David, I as in Igloo, PDI. That's a strictly income one. There's a lot of them. I do like the BlackRock one. Have I heard of Peter Griffin? I have heard of Peter Griffin, sir. Yes. Yeah, MU's interesting. I like MU. I'm not sure what Capstone closed-end fund is. Sorry. Look, Nebius and CoreWeave are more interesting to me these days than other things. I mean, I'm not in them. They're getting a little bit more interesting after the huge decline. So I got to do more work on it. I mean, yeah, some would say that I look like him. I hear you. Oh, you know what? I haven't talked about BMNR. We talked about it last night. All I can tell you is my long-term thesis on Ethereum is not broken, in my opinion. I was buying more BMNR. I'm probably going to add more again. So I'm not worried about it, but I have a long-term time horizon for them. So Verizon I like, but look, Verizon's an income play. I'm not expecting Verizon to go to 60, 70, or 80. It's an income play for me. So if you're talking about capital appreciation, I would say there's other things that make sense. Oh, CRM, forget it. I think Salesforce is one of the most underrated companies there is. And I am probably going to add more to my position before they report. So when are they reporting? I need a whole new setup. I can't deal with this mic in front of me like this. Salesforce is reporting on December 3rd. Oh, next week. This week. I'm going to need to buy more on Monday. I do like Salesforce a lot. Biggest positions, S&P 500 index. If you mean individual position, Meta. Oh, is there a new Tom Lee video? I need to watch it. Thank you. I'm just buying BM&R equity. I'm not buying freaking spreads or anything. I'm not fancy like Chris. Chris does all that stuff. I'm not fancy like him. Yes, CRM may be a boomer stock, but it's a cash cow, and I think it's undervalued. So we'll see. I don't like these questions about the Mag 7 because holding one for the next freaking 10 years is such a hard thing to say. Oh, no. I can't pick. I just can't do it. I can't do it. I'm sorry. I have not looked into NVTS. I am not selling calls on the S&P. Look, the S&P is my freaking safe haven. That's where capital goes for retirement. That's a hedge against myself in case I blow up my accounts. So I'm different. I do believe that I am not smarter than the market. And I do believe that over time, it is hard to beat the market, even though we're in a very big bull market that makes it look like it's easy to freaking beat the market. But I have a good amount of capital going into the S&P. I did not spend Thanksgiving with Amit. We went out to dinner on Wednesday night, Thanksgiving Eve. It was a great time. Got to meet some people that I never met before that were awesome. So it was pretty great. Look, if I was going to say something to my younger self, it would have been, and look, I made a lot of mistakes in my life. There's no question about that. I think everybody does. And on one hand, you have to make those mistakes to get to where you are. So I don't know that I would be where I am without making those mistakes. So it's hard to say that I would go and tell my younger self not to do anything differently. But in the respect that it wouldn't change certain things and just from an investing standpoint, I would have told myself to be more responsible in my 20s. And I would have told myself to allocate more to the S&P in my 20s and not take, I wouldn't say as much risk, but I would have taken investing more seriously when I was younger and done more research. the type of research that I do now. I really do think that financial education is the most important thing that we can arm young adults with, and we can arm high school students with. And I would love if we saw a educational reform around this, because I think it's so important. Oh, I mean, I've loved milk from a young age, so. I'm not in the business of adopting anyone, sorry. Yeah, you listen, you gotta own your mistakes. 100%. You have to. I mean, maybe I'll do something on how I do research, but look, I don't think it's that hard to do research these days. There's so much good, so many good sites out there to pull information from. I think, look, it's not hard to build this out. I mean, if you're part of the Milk Gang, I actually put these spreadsheets, I believe, in the post. You can just go download them on YouTube. It's not hard to put give me a company. Let's put it in and let's see. Somebody give me a company that I just don't follow. And let's just do something remedial. Anybody throw out a ticker. TMDX. I have no freaking clue what that is. All right, Starbucks. I actually know what Starbucks is, so thank you. Let's see where Starbucks is. And I know that Starbucks has its own problems with union and stuff like that. I get it. All right. So let's go in. Let's grab all the numbers. So and the nice thing about the way I build spreadsheets, I can just add that in and then pull it down. Like this Starbucks looks really interesting to me. Thank you. And unfortunately, you're going to have to deal with me for a moment because I actually like everything looking the same. All right. So Starbucks looks interesting. And the reason I build it out like this is that way I can go in and I can group everything by what's trading at the lowest valuations. I did not expect that, everybody. So Starbucks has almost 50% growth over the next 2 years. They're trading at less than 25 times earnings. To me, that's interesting. So right there, that would make me want to do more research. So here's where I would start with doing more research, okay? I would bring up Seeking Alpha. And I would start really looking through certain things. So first, let's look at the dividend. Why is the payout ratio 115%? Now, it says for 2025, they're expected to do $2.40 of EPS, which is under what their annual payout is. But next year, $3.02. So is the dividend at risk? Probably not if the analyst community's growth rates are correct. From a dividend aspect, I like them getting paid 2.86% on something that would be a capital appreciation turnaround play. Great growth rate on the dividend, 15 years of dividend increases. I like all of that. Dividend history, great chart. I mean, I love the dividend growth. So let's look at the financials real quickly. Horrible gross margin. Horrible gross margin. There is such a big cost of, let me make it a little bigger for everybody. The cost of revenue is huge for them. I mean, what is that? mean, roughly cost of revenue is 77% or so. This is a low margin business. Now, it does not take a ridiculous amount of money to run the operations based on how much they're paying for the goods. Operating income is a very low margin business. Operating income, not a lot of interest expenses. And when I see that, it makes me think that they don't have a lot of debt and the balance sheet is clean. I actually have no idea, so we're going to see it together. All right. Profitability is down a lot. Let's see. EBITDA. I don't like that it's declining. Gotta tell you. All right. Balance sheet. So we got $3.5 billion in cash, $38 billion restricted, $250 million long-term investments. All right. 14.6 billion long-term debt. What was the EBITDA? EBITDA was 5.5. All right, I'm sorry. Yeah, about 5.5. That's not a crazy ratio. So let's go through the cash flow statement real quick. All right, stock-based compensation. I don't know why it wasn't on the other one we were looking at, but that's not crazy. Good free cash flow. So $2.5 billion on free cash flow. What's the market cap? Yeah, it's a little expensive on a price to free cash flow for my liking. How bad's the chart? Oh my God, past 5 years, it's done nothing. This stock has seriously underperformed the market. I mean, so here's the other thing. Are you better off just going to an S&P 500 index fund at that point? Because that's the other way you got to look at it. If you can't make a decision when you're picking individual stocks, for me, I look at the S&P. I'm not smart enough to know if Starbucks is going to rebound or not. But I am smart enough to know that I'm going to own Starbucks as well as a lot of other companies by buying VOO. I mean, VOO is up 89% over the past 5 years, 227% over the past decade. Starbucks is up 41% in the past decade and negative 11% past 5 years. So what's the historical high for Starbucks? $1.25? Are we getting back there anytime soon? Doesn't look like it. I mean, let's go to the investor relations. Look at the deck real quick. I don't know why that didn't update, so I will reshare it. Just give me a sec. Do they not have a freaking presentation? The hell? I'm trying to find a presentation here. Give me a sec. How do you not put out a presentation? That's crazy talk. What the hell's going on here? How is that even possible that Starbucks doesn't put out an investor deck? Really? Give me a sec. Hold on. So here's the Q4. All right, if I'm blind, somebody please link in the chat if they have an investor deck and send me the link. I'm not seeing it. All I'm seeing is a cut sheet. This is all I'm seeing. I'm not seeing an actual deck to go through, which isn't giving me a lot of information. Like I would, at this point, I would need to go through the earnings calls, and I would need to go through some of the commentary. The reason I like decks is because they usually have a lot of information condensed and it's easy to go through because they make it easy. But at this point, Starbucks is not interesting to me based on the numbers that I'm seeing. Because even if it goes to 110, I think I'd do better in the S&P. So Starbucks just wouldn't be, I'm a customer, not an investor type thing. So you guys just saw how I do research more or less. Let's see. Yeah, that's interesting. Ask Grok, Gemini, and ChatGPT. Yeah, that's interesting. Oh, listen, I'm simple. I go to Starbucks, just give me a freaking pike with half and half. I'm simple. I will say, I will enjoy a cappuccino from there. Like, I like cappuccinos. I don't normally get them from Starbucks, but I think Starbucks makes a pretty good cappuccino. But I'm a pike, half and half, in and out. I don't want a pump of this. I don't want a pump of that, blah, blah, blah. I've been saying that they need alcohol sales. I mean, think about it. Who the hell's going to Starbucks at freaking 8, 9, 10 p.m.? That's not the time people are going to Starbucks. And that overnight shift is a midnight to 8 a.m., right? So I just think Starbucks in the late afternoon, early evening is not busy compared to the morning and the afternoon, early afternoon. And I think turning it into a wine bar would be interesting. Yeah, the boys abandoned me tonight. They're all out having fun, but I'm having fun hanging out with everybody. So kids don't go to Starbucks and run into their mom. Where do kids go? I see a ton of kids at Starbucks. Starbucks should turn their stores into Steve live stream watch party at night. That'd be hilarious. Hilarious. Think about it though. If Starbucks turned some of their locations into a wine bar, okay, you would get a crowd at night. How big that crowd is, I have no idea. But it gives them another vertical because now they can come out with their own wine and sell it in not just Costco, but every freaking liquor store. It's not a horrible idea. And it allows them to do something at night. I do not deliver milk to Starbucks. I apologize. Adobe's got great numbers. I'm worried about the business, though, with AI. I'm not in that realm, and it seems like something that can get absolutely disrupted, so I have no idea. You know what? That's a good question. How does Starbucks not sell pie? We need to write a letter to their CEO and say they need blueberry and apple pie. I mean, seriously, who do they think they are? Yeah, I think there's a lot of Starbucks in big cities that would be really good for wine at night. I really think. I do believe so. Well, how am I a boomer? I don't understand how I'm a boomer. I'm invested in BMNR. How many boomers are in BMNR? I mean, come on. All right, now that's crazy talk. Dunkin' Donuts is not better than Starbucks. I'm sorry. I'm drawing a line in the sand. I'm drawing a line in the sand. I love Dunkin' Donuts for the donuts. I'll even get a blueberry muffin from there, even though I would rather go somewhere else for muffins. They're not bad. But come on, their coffee's not good. Their coffee's just not good. Dunkin' coffee's not good, guys. I'm sorry, it's not. And I'll tell you something, their iced coffee sucks. Now, you get me a freaking double chocolate donut from Dunkin', I'm in. I have not met a donut from them that I don't like. Their Bavarian cream is great. They make very good donuts. I'm with it. I don't like their freaking coffee. Now that's crazy. You can't be from Boston saying Dunkin' is trash. Ben Affleck and Tom Brady are coming after you. Can't do that. I don't know. I mean, I will say you have to acquire a taste for Starbucks coffee. I really think you have to acquire a taste for it. And their coffee, I like it, but it could be strong for people. I haven't worked out in a long time. I have no idea what I would be able to bench. Oh, don't say Tom Brady's overrated. I'm not a Patriots fan by any means. Tom Brady's the greatest quarterback that ever lived. Come on. Who we kidding? It's like saying Jordan's overrated. All right, there's a lot of people saying McDonald's coffee is the best. I've never actually had McDonald's coffee. Maybe I'll try it. Maybe I will freaking try McDonald's coffee. Enough people said that it's good. Oh, don't do that to me. Jordan or LeBron. That's not even a question. It's Jordan. And I'm going to trigger some people. You ready? Here's my starting five. I got to put a freaking starting five on the court. This is the starting five. And they're not getting beat. There's no starting five that you can freaking come up with that's beating this starting five. Kobe, Jordan, Curry, Tim Duncan, Shaq. Nobody's beating that starting five. Period. All of them in their freaking prime. Good luck. Jordan and Kobe are going to play freaking coast-to-coast defense. They're locking everybody down. Good luck going to the rim with Shaq and Duncan. Good luck getting a rebound. Good luck. And then on offense, good luck guarding Shaq in his prime. Good luck guarding Duncan. And then try locking down Jordan and freaking Kobe. And then Curry can hit from anywhere. There's just no team that can beat that. Sorry. Bird doesn't need to be there. You can make a different lineup that would be amazing and throw Bird in with Magic, throw Akeem Olajuwon in there at center if you don't want Shaq. Arguably, you could throw Stockton in or Jason Kidd. But, I mean, do we really think the starting five that I just said is losing to anybody? Throw LeBron on there, but, I mean, they're not losing. Now, if you need me to make a 10-man team with a bench, yeah, I'm putting LeBron as a backup. Absolutely. I'm putting Durant as a backup. I'm getting Bird on there as a backup. I'm getting Magic on there as a backup. I mean, they're great players. I doubt it. Shaq over Akeem. I mean, I think LeBron's top five all time. Like, I'm not disrespecting LeBron. I think he's top five all time. What do you mean? Why am I making you laugh? Starting five felon edition. That's hilarious. Yes, I know who Ronaldo is. No, I don't freaking watch soccer or football. You don't need Shaq to guard the perimeter. You got Kobe and Jordan. Kobe, how many times did Jordan win all defense? Hold on. Jordan was a 9-time NBA All Defensive First Team. 9 times. I mean, I don't think Bill Russell would do anything in this league right now, so I think that's irrelevant. Gotta say. I don't know enough about Messi and Ronaldo. Oh man, favorite Yankee has got to be Don Manley, followed by Jeter, followed by Rivera, followed by Judge. Jeremy Lin, wow, that's a blast from the past. Did anybody, I don't know where the boys are. They're all out drinking or something. Who knows? Did anybody buy anything good on Thanksgiving, Black Friday? Stop it. David Wright is not better than freaking Jeter. Stop it. Just stop it. I think I want to get a new computer set up. I'm going to need to freaking really look at this. I do think Manley should be in the Hall of Fame. I mean, sure, back injury and whatnot, but he was the most, I mean, he was one of the best players in the 80s. I mean, think about those years, 84, 85, 86. I mean, what did he do in 85? 35 home runs and 145 RBIs with a 347 batting average. Let's see if that's correct. Hold on. Baseball Reference, 85. 35 home runs, 145 RBIs. I was right on both of those. 324 batting average. I was a little off. In 84, he did 343, and in 86, he did 352. I mean, this guy was a monster. Monster. Yeah, we'll see. He's up for the vote from the players this month, so we'll see what happens in December. Maybe he gets in. Oh, come on. Barry Bonds over Sosa all day. I mean, listen, I'm a baseball fan. What can I say? You got to respect A-Rod. I mean, look, do I like that he lied? No. But can you really say he wasn't a good ball player? Absolutely not. Guy was amazing. Guy was one of the best third basemen you'll ever see. He was a great hitter. So I wish he would have freaking hit 700 home runs. I have a pretty cool piece of memorabilia from him. So I actually got to meet A-Rod. Believe it or not, he is such a nice guy. I got to tell you, I met him once in the golf industry, and I went to a signing of his. And I will tell you, I got to talk to him for like 5 minutes at the golf course. Such a nice guy. Like really, really nice guy. So, you know, I'm sure that people say bad things about him. He was an absolute gentleman. And I actually had him right. I got an A-Rod replica bat from Louisville Slugger, and I had him autograph it with 600 home run club and the date that he wrote his 600th home run. And I said to him, when you get to 700, I'm going to have you signed again. He hit like 696 and he didn't come back for the last season to get the extra 4. Crazy. Oh, hitting a baseball is so much harder than hitting a golf ball. Hitting a golf ball, it's sitting there. It's stationary. It's not hard. It was not made out to the freaking milkman. Yeah, I don't know. Tanner, he texted me they can't make it tonight. So I don't know. The boys, they ghosted me tonight. They ghosted me. What can I say? It's all good. I like hanging out with all of you. I mean, look, golf is a very hard sport. I was very good at it, but it takes a lot of dedication to get good at it. Oh, wow, that's a great question. Hole in one in golf or grand slam in baseball? Grand slam in baseball, I'd rather have. There was a point in my life when I was scratch. For those of you that play golf, there was also a point in my life when I held like a 2 or 3 handicap when I wasn't nearly as competitive, and it was very easy for me to play to a 6 or 7 for a long time. Now, I have not played golf in, God, 5 to 6 years. And I do think that if I took 2 months to stretch and lose weight and another month to hit balls, I could break 80. I think my body is just not in a good place for the rotation and everything. So I would need to really stretch and get back into golf shape. Nah, I got a lot of the way that I used to lift, it was not good for the body. And a couple of my friends were having real problems with their joints and stuff. And I'm starting to really feel it. And the way that we used to lift was just not good long term. I don't recommend people really lift the way that we did. Like, I was a freaking monster. You know what? When you're really good at something and then you don't have the time to put into it and you become not as good, it's not enjoyable. So, I mean, going out there and not shooting 75 or below, it sounds so horrible, but it's like you just get angry when you used to be able to do that. So I also, it was a combination of things. The people that I used to play with, they all have families. They want to play in the freaking early morning on the weekends and get home. I don't want to do that. I want to wake up when I wake up. I want to play in the afternoon. For me, going out at 11:30 to 1:30 is great. I would even enjoy going out at 3 o'clock on a Saturday when there's nobody else on the freaking golf course. So you ain't shooting 75. Yeah, I'm not shooting 75 today. Absolutely not. But I do think that if I stretched for 2 months and went and hit balls and putted for a month, I'm breaking 80. Maybe I don't, but I do think I am. I grew up playing golf. Like, I grew up in the golf business. I was in the golf business for a very long time. I played so much of my life. That stuff doesn't leave you. It would become a question of how quickly can I get my rotation back, and how quickly can I get my swing back? That's what it would come down to. I think I have a video of me hitting balls. I actually think I have one on my phone, I think, from a while ago. If I can find it, I'll send it to my computer and I'll freaking play it. You know what? I think I have one in my email somewhere. Hold on. I'm not finding it for some reason. I really thought I freaking had this. And it would have been in this email. Give me a sec. I'm surprised I can't find it. It's actually annoying me now. Oh, look at that. Tanner's here. The real question is, I don't see him down in the things. So, he had other obligations, but he's in the chat. Does he want to come on and talk is the real question. And I am going to find this because I think you guys think I'm messing with you about golf. I can't believe that this isn't in here. This is really freaking bugging me out. I don't know, guys. I don't know where the hell this could be. Let me check my Google Drive. I actually don't think it's in here, but maybe it is. I know where oh man. I know where it is. It's in my iCloud and I don't even have access to it. It's in my freaking iCloud. God damn it. I wonder if it's on my tablet. I'm telling you this footage exists. I just, it is shocking that I can't freaking find it. Shocking. You know, I should be able to type in freaking golf and it should just come up. If only life was that freaking easy. This is crazy. And of course, tomorrow I'm going to look for it and I'm just going to find it when you guys aren't here. This is thoroughly annoying me. Has this ever happened to anybody else? Like you're looking for something, you know where it should be, you just can't freaking find it. So freaking annoying. I don't tell everybody. I didn't say you stood me up, Tanner. I said that everybody had other obligations. I just said you're in the chat now. Let's see if you're going to come on and talk. That's what I said. I'm still looking for this, by the way, everyone. What is this? Yeah, I don't know. That's what I've been looking for and rambling about. I've been trying to freaking find a video of me hitting driver, and I can't freaking find it. And it's just annoying that I can't find it. Yeah, I don't know, everyone. I am gonna have to. It existed. Trust me, it existed. It absolutely freaking existed. You guys trying to act like I freaking wasn't good at golf. That's crazy. You know how freaking pictures I have on my phone of golf and stuff is crazy. Where the hell is this video? I mean, if we have to, I will get people on here that I play golf with if we want. All right, it was definitely before this. I don't believe I would have deleted it off my phone. Oh, this is one of the sickest locker rooms. Where the hell is this video? I gotta tell you, everyone, I'm freaking crazy. I am just, I don't get it. I don't know where the hell it is. I don't get it. Like, I know exactly what I'm looking for. This is so annoying. And it would have been on my D drive on the other computer, but I disassembled it and crushed all the hard drives and thought I moved everything over. And I must not move that stuff over, and I don't know my freaking information again to iCloud. Well, you guys are just gonna have to trust me that it exists. And at one point in my life, I was very good, and now I probably suck. But I think I could get back to breaking 80 if I tried. This is insane. I feel like this is just going to consume me now trying to find this. How could I have not? Why would I have deleted this? That doesn't make any freaking sense. The amount of freaking pictures I've just gone through is wild. Okay, I don't know. Crazy. Can't find it. Yeah, take off my shirt, get a few swings in, not happening. Oh man. But yeah, I have no interest in playing golf ever again, to be honest with you. I told him that he should start playing golf. I think it would be good for him, something he can do on the weekends, something he can do during the day. I think he'd have fun. Let's put it this way. If YouTube was a thing when I was in my 20s, I would have had a channel like Good, and myself and the crew, it would have been incredible. Like, we would have had a whole golf house and everything. I remember I grew up in the golf business, guys. I just have no interest in playing. It's a time suck. And all the people I used to play with, they all play the butt crack at dawn. I have no interest in doing that. Oh God, how much should I pay for my wedding? Listen, I'm going to give you some advice that you're not going to want to hear. Don't have a wedding. Go to City Hall, go get married, get a marriage certificate. Don't spend the money on a wedding. It's not worth it, my opinion. So, just saying. I think they're a waste of money. You're paying for everybody else to have a good time. It is just not worth it. Do not waste the money. You're better off putting that money in the S&P, putting that money into a house. Man. And I know a lot of people don't like freaking hearing that, but what are you going to do? You're paying for everyone else to have a great time. Right? Do it. Have a private ceremony with your family in your parents' backyard or your backyard, or go to City Hall and get married. Don't start dropping crazy amounts of money. And then think about the time suck. It's an absolute time stuck. Got to pick out flowers. Got to do this. Got to do that. Stop it. It's a waste of time. It is you'll never get me to say it's not a waste of time. Yes, I've seen the video of the guy who tied the snake on to his friend. It's hilarious. Yeah, listen, I'll die on that hill. It is not worth it to spend the money on it. It's just one of those things where you just freaking, I don't know. I don't think it's worth it. I know nothing about timeshares, so I can't help you with that. I mean, look, how about this? Instead of having like a big freaking wedding, take 20 people out to a really nice dinner. What's wrong in that? 25 people out to a real nice dinner. Oh, there's only one club brand, and that's Titleist. I mean, come on. I used to play pings. I had a set of Ping Zing 2s. I had a set of i3s. And I set of i2s also. And I had a set of the S59 blades. And then I moved to Titleist. And Titleist, I just think is freaking incredible. I mean, can you imagine freaking taking out a loan to go have it's crazy. Putting on credit cards, that's crazy talk. I can't freaking believe people would do that. It's crazy. So, believe it or not, I just found something, everyone. I just found something of a range session when I was working on something. Wow. For everybody that stuck with me and thought it didn't exist, we found it. Working on a range session on something. It exists. It exists. And before I freaking show this, I did average over 300 yards on my drive. Just saying. I mean, A lot of torque in that. A lot of power in it. Very compact swing. Used to smash a ball. Smash a freaking ball. Like those ball that got pummeled, that thing. No, that shaft is an Oban extra stiff. It's like it's like swinging a telephone pole. So I'll show you. It's a Devotion 7 Oban golf shaft. I don't even know if they still make these freaking things anymore. Hold on. Oh, they do. Here we go. These are some crazy shafts, by the way. Like everything I did was all for my swing. So I used the Devotion freaking shafts, the Tour Reserve. So it was, the one I was playing, it was a Devotion 7 X Flex. So I'm if you like really play, you got to make sure your shafts are correct. There's a 75 weight. I mean, you got to make sure your shafts are on point. I saw the ball go back into the left. It's a conspiracy. That's pretty hilarious. Yeah, I mean, look, that was a lesson that I was taking is I was working on something with one of the pros, and that was just a random swing that they sent me because I was working on something. But yeah, I that was I mean at that point, so I was a member. I'm not going to say where I was a member at that point, but I was probably a 5 handicap at that point. Because I was on the downhill. That was probably like 2016 or so. I was probably like a 5 handicap then. That area, 6 handicap. Yeah, yeah. 76 to 78 was normal at that point. Why do you guys want to replay? Swishy pants? I don't even know what the freak that means, swishy pants. Oh my God, I can't believe it's 11:45 already, everyone. Well, I think I'm going to get going. We're going to be on tomorrow. I'm going to do a 3 o'clock stream, I think. Coffee, Sunday afternoon, coffee and stocks with Steve. I'll come up with some topics, stuff I'm looking for next week and stuff. And we'll go from there. I'm not doing golf videos. Definitely not doing golf videos. Man, you guys are freaking making fun of how I say coffee. Okay. Well, appreciate everybody being here and hanging out. and we will be back tomorrow. I'll come up with some topics and we'll go from there. Have a great night, everyone. See you tomorrow.